right, we are following up yesterday's video about the Bank of Canada's monetary policy report. We were expecting a 75 basis point rate hike up to 4% from the original 3.25%. But as you can see here from this first article listed, that the Bank of Canada hiked their rate up to 3.75%, so only a 50 basis point rate hike, lower than what was expected. But we're going to take a look at this article from CBC Canada really quickly. What we're taking a look at here, though, this website is Forex Factory. Forex Factory is an awesome website that gives you all of every single currency, every single news event related to each currency, as well as related articles that are beneficial for the news event. So if you're a trader, definitely check out Forex Factory because, as we know, the news dictates what happens in the markets more often than not. So keeping up with the news is definitely very important. So here, like I said, we're going to take a look at this article really quickly, talking about the Bank of Canada's decision to only raise their interest rates 50 basis points. So here we go, article from CBC, written by Pete Evans of CBC. We can see here, Canada's central bank continued its campaign to wrestle high inflation into submission on Wednesday, raising its benchmark interest rate by 50 basis points to 3.75%. The Bank of Canada's rate, officially known as the target for the overnight rate, is the amount that retail banks are charged for short-term loans. But it filters down into the economy by influencing the rate that Canadians get from their own lenders on things like saving accounts and mortgages. After slashing its lending rate to nearly zero early in the pandemic, the bank has raised its benchmark rate 6 times since March as it scrambles to rein in inflation, which has run up to its highest level in decades. So that's something to keep an eye out for. Keep a note on that Canada's inflation is the highest it's been in a very, very long time. So they are raising these interest rates in order to try and fight inflation.
There's something coming sooner than you might expect. Are you ready for it?
So we can see here, this is an interesting little graphic here. Annual inflation rate in Canada is the red line, and interest rate in Canada is this blue line here. So we can see inflation, inflation from January of 2018 to January of 2020, roughly. January of 2020 roughly is when it peaked. That's probably a little past January. That might be March or April. Is when it peaked, and it has come down a little bit as they've continued to raise their interest rates. The more they raise their interest rates, the lower inflation goes. So with this 50 basis point rate hike up to 3.75%, hopefully interest rates will come down a little bit. Now we're going to take a look inside of the EdgeFinder really quickly at a GBP pair. And taking a look at this, all of our GBP pairs, they've kind of stayed in the same neutral area. We have a lot of neutral scores, not a lot of sells in the EdgeFinder currently, which of course is our market scanning software that takes into account all of these different metrics and scores them on a bias of buy or sell, depending on how the market is trending. So lots of neutral scores here, including all of our pound pairs. We have GBP and ZD, and I should mention too that if it's in this -2 or +2 zone, that it's really leaning towards a buy or a sell respectively. Not as much in the one score, or in this one case NZD USD has a neutral score of 0, so that one is really just not leaning any direction at all. But a +2 or a -2 is safe to say that it is heading in a certain direction. So we have GBP NZD with a score of -2, Euro GBP as well. Don't want to miss any. GBP USD -1, GBP AUD 1, GBP CAD 1, GBP JPY 1, and lastly GBP CHF with a +2. So I think it would be interesting to take a look at euro pound with a score of -2. So we'll go into the euro pound breakdown page.
Are you interested in our market scanning software, the EdgeFinder? You can try it today for free. Click the link in the description and fill out the form letting us know you're interested in the software. A member from our team will contact you with trial access information. The EdgeFinder has brand new features like price forecast and economic news. There has never been a better time to try out the software for yourself. Click the link in the description and try it out for free today.
So here in the euro pound breakdown page, like we mentioned, we have a score of -2 here with a neutral buy bias, but with the score of -2, we can say that this market is kind of in a downward trend. COT data has a score of +1. We can look at our sentiment section down here for COT data or institutional traders data. Pound 30.58% long and 69.42% short from institutional traders, while the euro sits at 56.74% long and 43.26% short. Retail sentiment is 55% long, 45% short, so neutral retail score because it's not really leaning one way or the other. Although retail traders are slightly on the long side here. Seasonality score of -1. We can look at the numbers for October. And looking at September and really even since August, we have our all-time average and last 5-year average here. We can see a very distinct downward trend through these months to October, and at least in the all-time average continuing on into November. In the last 5 years, however, it begins to go back up. And from November to December, historically speaking, all-time and last 5-year both trend upwards. And we can see that from September to October that the current year average is consistent with that downward trend because we are all the way up here in September and dropped all the way down here in October. Trend reading is -2, and what trend reading means is based on the trend over the past couple days, past couple weeks, how has this market been trending, been moving. A score of -2 means that it has been moving down, which makes sense because we do have that overall score of -2, and like I said, with that you can kind of assume that this market is going to be trending down, and the trend reading agrees with that. Historically, over the past couple of weeks, this market has been trending downwards. Lastly, GDP growth and inflation both have scores of +1, and unemployment and interest rates both have scores of -1. We can go to our fundamentals section here, look at GDP growth for the pound. It sits at 0.2% compared to 0.8% for the euro. Unemployment is 3.5% for the pound and 6.6% for the euro. Inflation, again, we talked about that high inflation for the pound, highest it has been in decades. 10.1% inflation for the pound compared to 9.9% inflation for the euro, so really high for the euro as well. Lastly, interest rates here, we have 2.25% for the pound and 1.25% for the euro. Now, the EdgeFinder is still a work in progress. While it does take in a lot of data, it is still getting updated. The data is both getting updated hourly, as well as the software itself is constantly getting updated. So this has not actually updated to the current interest rate data yet. But if we go into the interest rate breakdown here for all of our currencies, we can come down here and we can look at Canada and we can see its previous interest rate was 3.25%. That was the interest rate up until this morning, and we know that it was raised 50 basis points up to 3.75%. So it's still important to keep up with the news, and in the next day or so, by tomorrow, this should be changed to 3.75% as it continues to update. So yes, the EdgeFinder is still a work in progress. It has a lot of very, very useful benefits and a lot of useful data, but is still being worked on at the moment. So let's go ahead and do one last thing really quick. We're going to take a look at TradingView, and we're going to look at the pound dollar on the daily chart. We can see here pound dollar on the daily chart. This is a nice bullish green candle following up yesterday's candle, another green bullish candle that came in with the news. If you want to look at the daily chart, or the not the daily chart, the hourly chart, We can see here, this looks like it's when news broke. So when news broke that interest rates were being raised, 50 basis point, we saw a nice green candle form and a little bit of consolidation, but continuing in a bullish direction nonetheless so far today. So that was a quick follow-up to our previous video on Canadian interest rates. I hope that you guys enjoyed this video, and we'll catch you in the next one.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.